Welcome back. It's still tuned into Midcap Radar. Let's talk to a management now. Dodla Dairy is the management joining us today. The company's EBITDA margin declined YOY while the revenue surged 14%. Dodla Sunil Reddy, the managing director of the company, is joining in now to understand the quarter gone by and, most importantly, the outlook going forward. Mr. Reddy, good afternoon. Thank you so much for joining in. I wanted to understand the outlook on margins from here on. There's been a decline on a YOY basis, and there was also a spike, an unusual spike in procurement prices in the flush season, despite the flush season. Do you think the guidance that you had given of 8 to 10%, there could be some downward risk to that?
Thank you very much for having me on the show. Regarding our procurement prices, it was unusual that the flush season, which normally is a period of surplus for the dairy industry, this year was lacking, and there was not the surplus was not available in the system, as most of the country was also running through a shortage. And that is the reason procurement prices didn't come off, and they've actually gone and become as expensive as what the normal summer prices would be. But I think we've already factored in the summer prices, and we have not yet taken a price hike, not in the current period. I think as we go forward, depending on how the summer pans out, it'll either be a price increase that will have to come into the offing, and the margin should remain in that 8%, 9% ranges.
Okay, so are you still seeing the shortage that you spoke about that happened in Q3? Is that shortage still continuing?
Yes, it's still continuing because of either bitter winters across the country. That shortage is still continuing.
Okay, Mr. Reddy, we get that completely. So the earlier EBITDA margin guidance was in the range of 8 to 10%. So you're now reducing the upper end of the band to 8 to 9%. Is that correct? And also, have you revised your revenue guidance or for FY26? We understand that the earlier guidance was in the range of 12 to 13%.
So basically, that 1 or 2% when the consolidated will be very difficult to crack as an exact number. And also, we have done an acquisition in Osam, and an Africa business is doing well. So I think our revenue guidance would still be in the range of the 14-15% kind of a range that we will be looking at. And the EBITDA margin, although right now it's showing 7.5%, we can still look at it going to that 8 to 9% of the EBITDA margin.
When are you planning to take a price hike, Mr. Reddy? Will it be in Q4, or do you push it to the summer season that would start somewhere in Q1 of FY27?
It all depends on the weather. I think if February and if the El Nino predictions that are coming to be true and the summers start to move in earlier, we might have maybe a 10-15 day difference between the fourth quarter or the beginning of the first quarter.
Okay, so sometime between the end of Q4 and the beginning of Q1 FY27. We get that. You spoke about the acquisition, you spoke about the inorganic growth that has come in through Osam business. So now give us targets for that particular business. How has the current performance been? And we also understand that it operates at a slightly lower margin compared to your original business. So going forward, what will be the blended margin trajectory?
I think currently this is the first quarter where we have taken Osam as a whole quarter, which has given us a revenue of close to 80 crores. And also the margin is a little lower because we're still correcting it's in that 1% range of the margin. But we are confident that this will give us around the 300 crore or in the short term to 500 and 600 crores in the little longer term in terms of revenue. And the margin also, we're anticipating that we can comfortably push it up to the 5-6% of EBITDA margins to start with in the short term of a year.
Okay, so that is about the Osam business. Revenues of around 300 crore rupees in the short term to 500 crore rupees in the longer term. What about value-added products? You spoke about how procurement prices were unusually high. That would have impacted margins across the board. So how much contribution came in from value-added products? And do you plan to expand that further in terms of contribution?
Thank you. Yes, the value-added products, in fact, has grown for us from 23% 9 months last year to 25% this year, in spite of having a summer which was non-existent and most of our summer products like buttermilk, lassi and ice cream not doing well. This is on the back of paneer picking up for us and other products also moving up. The reason why the overall value-add shows a decline from the 32% was because our bulk trade of butter and powder almost became non-existent. Like, for example, in the current quarter, it was 0 to compare to 70 crores in the last year, the same quarter. But I think the value-added as such has done well from 23 to 25%. Also, Osam Dairy that we have acquired when we look at the consolidation is at a lower value-added around 13%, which we also think that we will be able to move that up to around the 15-20%. So in the days to come, we will still see a further improvement in our value-add product range.
Understood that. A further improvement in the value-added product range. Give us a sense of your market share among the private players. What is the overall pie of the market that you enjoy? And has that improved, especially post the acquisition? We understand earlier it was in the range of 6 to 6.5%.
For Osam, it will still be in the same range because it's still too early for us to make a major call. We're still in the process of correcting. It's hardly been 4 or 5 months that we have acquired. Right. I think that will where it will still continue to be as a market share of the...
I wanted to understand your animal feed business or Orga feed, which is still a small percentage of the overall business. But, you know, there's been so much happening globally, and animal feed comes to mind when we talk about that. Right now, how much is it as a percentage of revenue? How do you plan to expand it? And do you have export exposure here?
There's no export exposure for cattle feed. It's entirely a captive business to our own farmers that we are doing. Okay. I think it will be in the range of 150 to 160 crores for the financial year that we are looking at, and a profit margin of around 10% of EBITDA that we can comfortably look at. And that is where it will be. And that would be almost at the range of, let's say, 50% of capacity utilization that we will be. And I think in the year and a half, we can look at getting our capacity utilizations up to that 80-90% mark so that it can further go up to the 400 crores kind of a revenue in the medium term.
Understood that. And in terms of expansion, you know, we understand that you were looking at expanding capacity as far as Maharashtra was concerned. Total capex lined up. Where does Maharashtra currently stand at? And especially give us timelines for the Orga feed business.
So the Orga feed business, as I said, the existing capacity that we have, which we're roughly now using around 50-55%, will maybe in a year and a half come to full capacity utilization. And coming to Maharashtra, out of the 280 crores that we have earmarked as capital, we have spent 60 crores. And the remaining 220 crores will be spent in the year to come. We are looking at it in the beginning of the financial year 27, that we will be able to commence production and add around at least a 3.5 lakh liter or kind of an operation as an additional operation there.
Okay, take that point. Mr. Reddy, thank you so much for joining in and giving us perspective on what happened in Q3 and most importantly, the outlook on the business going forward. That's the word coming in from Dodla Dairy. They maintain their guidance on margins and revenue growth of 14 to 15% and spoke about some of their acquired businesses and the animal feed business as well. With that, we'll slip into a short break. But before we do that, here's a quick sneak peek into the stocks that we will address on your stocks today. Do not forget to catch fundamental and technical experts give their views on these at 2 p.m. today only on CNBC-TV18.